Hey Finance Fam, Nikki here. My goal with this channel is to help you make, keep, and grow your money. So make sure to subscribe so that you don't miss future videos. In today's video, I want to talk about 3 reasons why most stock market traders lose money. I've been actively trading the stock market for about a decade, and I've made every mistake possible. So hopefully I can help you save some money on mistakes. If you've been paying attention to market news, you've probably heard all about the Robinhood traders. Robinhood is a broker who is known for simplifying trading and investing. Their app is quite easy to use, basically anybody could use it, and they were one of the first brokers to allow for free trades versus the larger brokers who would charge anywhere from $5 to $6 per trade. Now, basically every major broker allows for free trading and no minimums. Trading and investing has never been more accessible than it is today. And it's showing in the numbers too. Retail trading accounts were being opened like hotcakes in the second quarter of this year. Let's first break down what trading really is. Trading is when you're holding a stock for a short period of time. Usually, either you're buying and selling a stock or other security within the same day, or maybe within a few weeks or months. Trading is different from investing in a few ways. Traders are really trying to capitalize on what's called volatility, aka swings in the prices of stocks. They may or may not care at all about the underlying valuation of a company like an investor would. They usually just want to capture big moves, whether that's based on how the stock chart looks or based on news that comes out or is expected to come out on a company. For example, people may be trading Tesla based on expected news on the new models coming out or expected sales numbers to be announced, something like that. Okay, so to sum it up, traders are shorter term and they may or may not care so much about a company longer term. They just want to trade moves in the stock. And investors care more about the underlying financial health of a company, their longer term growth, and their valuation. Just bought some Nikola stock, and it's gone. It depends on which study you're looking at and which markets these studies are targeting, but in general, it has been found that between 80 to 95% of traders lose money. You can trade the Forex market, individual stocks, the futures market, and even the bond market if you want to. However, in this video, I will be mostly referring to trading stocks for simplicity. I actually started as a futures and stock trader myself when I got into the markets. The market has changed a lot from that time, and I've learned a ton in the last decade. So I'm going to go through 3 big reasons why I think most traders lose money in the markets. The first main reason traders lose money is because they don't take time to understand price action very well. What is price action? It's basically the visual representation of buys and sells in the market that get plotted on something called a price chart. It helps us visually see what's actually happening in the markets. You know those big panics in the stock market when they happen every once in a while? Well, we have price charts showing it happening in real time. It's fun. Learning how to read price action is also called technical analysis. In my personal opinion, if you're going to be a trader, keyword trader, it's essential to understand technical analysis very, very well. It helps you see major levels on the charts that could make or break your trade. It helps you see shifts in momentum that can help you manage your trade better, and it also helps you find potential price targets so that you're not guessing along the way what to do. Many people think technical analysis is a bunch of hoopla, especially serious investors. It's kind of like skiers versus snowboarders. One thinks the other team is kind of stupid. Team skier! Real talk, I actually love the snowboarders in my life very much. We gotta share the slopes. I beg to differ with the technical analysis haters though. I use technical analysis in combination with fundamental analysis to supercharge my own trading investing. And I'll have to chat about that in another video. The second reason most traders lose money is because their mental game isn't sharp. Due to this, they let their emotions overrun everything and they make big mistakes. Things like closing trades too early, setting stop losses too tight, not knowing when to take profit, overtrading or revenge trading. And lastly, the biggest thing that I preach about all of the time, not properly managing risk. For the love of the markets, please learn how to manage your risk properly. please. Part of solving this problem of letting your emotions control your trading is by having a rules-based strategy that determines what types of trade setups you're willing to take. No, you shouldn't necessarily be taking every single trade possible. Respect your time, respect your money, and have some rules. Another important key is to manage your risk the right way so that you don't easily get spooked out of positions on sell-offs. If you can't take the heat, you shouldn't be playing the game. I literally created an entire course on mastering your mental game as a trader or investor. Check out the show notes below to learn more about it. The third reason traders lose money is because the market is smarter than you think due to the forces behind it. It will do everything that it can to scare you out of your trade, and it doesn't care about your feelings. It's harsh, but it's true. You have to really know how to work around that intelligence. Why is the market so smart? Well, algorithms and big institutions who know more than you can potentially move markets. Algos are basically computer-based trading systems that trade faster than you ever could. Institutions have big money, and they can set orders in the market that could potentially move the market. Here's an example of how the market can be really smart. Have you ever set a stop loss on a trade, seen the market hit your stop loss and take you out of the market, only to watch the market reverse back in your favor after? Most traders have seen this happen to them. And this is called stop loss hunting. What it basically means is that between institutional investors knowing where the herd will cut out of their trades and the algos that help move markets quickly, you're at a disadvantage. So how do you take on the big bad market when trading? Well, here are some tips for being a better trader that come from my own experience. The first tip, trade less. Yeah, you heard me right. We have a saying for this, and it's trade less, profit more. Believe it or not, doing more in trading does not mean more profits. It's so easy to get into a downward spiral of overtrading and trying to chase every single opportunity. Be patient. Think like a hunter and wait for the best shot. I call these your A trades. The second tip is to accept that losses happen and learn to manage your risk instead of being afraid of losses. Yeah, I said it. Losses happen. Don't be afraid of them. Show me someone who has been actively trading for more than a couple of years with no losses. I'll wait for that. If you're afraid of loss, you'll never make it in the trading world. The goal in trading is not to not have any losses, it's for your wins to just be bigger than your losses. The third tip is to hold positions longer. I found that swing trading, which is holding positions for weeks or months at a time, has been far more profitable for me than day trading, which is buying and selling within the same day. Also, I'm not chained to my computer all day. Worth it. The fourth tip is to not ignore sharpening your mental game. Trading is 80% mindset and only 20% actions. Like I said before, if you don't get your mind right, it leads to you trading with emotions instead of your rules-based strategy. Then this leads to a spiral of big mistakes. Sure, making money is sexier than studying investor psychology and how to master your mindset, but your bank account will thank you later. So to recap, here's why most traders lose money. 1, they don't take time to understand how to read price action well. This helps you do so much more than just know when to get into your trade. 2, they don't work to sharpen their mental game. Trading is 80% mindset. Mastering the mental game of trading may not sound sexy, but it's essential. 3, the market is smarter than you think, and between the algos and the institutional investors, it can make trading harder. You have to know their ways and learn how to recognize real momentum. And lastly, here are my tips for becoming a better trader. 1, trade less. Focus on the A plays. 2, accept that losses happen and learn to manage your risk. 3, think about increasing your holding time if you're not finding success. And 4, because it's just that important, I'll mention it again, master your emotions. All right, finance fam, that's all I got for you today. I hope you found it helpful. Don't forget to like this video and subscribe to the channel so you don't miss the next one. See ya.